Hey friends, good evening everyone. I'm Raju Angadi Vishwanath here, a certified financial technician from IFTA US and a SEBi registered RA from Traderz Hut. Today we are going to discuss, are the global equities they in the verge of a major crash or a meltdown? So why are we discussing this topic? Many of the times these things have happened, that there has been a discussion of a crash again and again, and the markets have been outperforming and they have been recovering. So here we are seeing a classical series of structure of similar patterns, the fractal nature of the patterns which is being observed across the major global indices, particularly US and Europe. So come, let us have a sneak into few of the charts where there is a bearish head and shoulder pattern is getting formed in the major indices. Like why? So fundamentally also, first let me have a brief. Bank of England has raised the interest rates because there is a hyperinflation which is happening, and crude is trading at the highs of crossing above the 90, that is $92, 93, 94 crosses the crude charts also, which I discuss again. There can be some 15, 20, 25% rise. But before that, let us get back to the US equities, starting with the pattern. As we are seeing here, it is forming a bearish head and shoulder pattern. So 35,500 to 600 becomes a major hurdle for the Dow Jones, from where we have faced a hurdle last week, and we are seeing a clear charts of a bearish head and shoulder pattern. Now the 20-day average becomes a hurdle, and on the downside 34,200 to 34,100, which is a 200-day, 233-day EMA, can be a short-term support, while the break below 33,100 or 33,600 zones on a closing basis would confirm a bearish head and shoulder pattern, and there can be a huge sell-off in the global equities. So it's signs of distribution what is seen. So this is just a mere one chart. The similar pattern is seen in the S&P 500, which is one of the another indices, the top 500 stocks in the US. We are seeing again a similar kind of a distribution and a bearish head and shoulder pattern. So you call it as a fractal nature. Why do patterns occur and why do patterns work? Here there might be $1 million question. This is all about theoretical concepts, and people might be thinking that patterns don't work. So we consciously or unconsciously, it's a behavioral psychology of the human beings, that we are habitual creatures in nature. We like doing the things which we are comfortable, and we do it repeatedly in an unconscious way. So a similar kind of a patterns repeatedly occur, and this is one of the classical short selling opportunities if one can execute it. Or is it a right time to get away from the equities? Be cautious. The easy money in the equities is gone. That's what I can say. Even if we break in a small way below and then a pullback, there might be a last leg in the equities in the wave, in the form of wave 5. So at least any rises as of now in the short term would be a good selling opportunities for the right shoulder which is in making. So the certain kind of a distribution is seen in the equities, the hyperinflation and the tightening money cycle which is going ahead. As the inflationary pressures rise, the interest rates rise, and also the liquidity which used to be provided by the European central banks and the US central banks is already, the helicopter money is being taken out. Now let us have a sneak into the charts of the DAX. So even after doing all these things, can the inflation be avoided? I don't think so. A tightening of money, I think the global central banks are behind the curve. Seeing a German DAX index, the similar kind of a pattern again is getting formed. already what we are seeing, the clear classical bearish head and shoulder distribution kind of a pattern is seen in the German DAX. So can this be much more worse if we break down clearly? A somewhat lagging and leading each of the indices are showing, and this is showing a, at least in the developed markets, there is a strong distribution which is happening. Well, now we are clearly in a interdependent economy, so any of the countries or the equities sell off happens, obviously we are going to not lag behind. Even the Indian equities also we are going to see a sell off. So this is the bigger picture, and seeing the crude oil, it's been in a structural strong uptrend and a strong momentum on the upward direction. So this is going to add a fuel on the fire. Like 105 to $110 can be seen in the crude oil going ahead. Above 93, 94 zones, crude oil can head further upwards, going ahead towards 110 to $115 in the forthcoming weeks or months. I am talking not only on the shorter picture. So as we are seeing in the global equities like US and Europe, the distribution is seeing from past few months already, not now. The smart ants, I think there is some distribution from the last July, August only. The unsustainable highs were created in the Jan 5th. So there has been a top in the Jan. Usually this can lead to a bigger distribution. The break below a certain patterns can lead into a wreck havoc in global equities. So be cautious. We might be in a bigger crash of a lost decade. So that's the update. Trade and invest wisely and objectively. For any queries, feel free to contact us on the Indian equities and global equities. If you are not subscribed to our YouTube channel till now, for the regular updates on the Indian equities, stocks, and the global equities, subscribe to our YouTube channel Traderz Hut. Join our Telegram channel. The link is there. You can get the link in our traderzhut.in, traderzhut.in in our blog post, where any of the regular blogs also you can learn, earn, and prosper with us. So follow us also on Twitter for the regular updates at Traderz Hut. Thank you, everyone. I am signing off as of now from here. We'll catch up in the next videos with more learning as well as earning updates from your RV Angadi. See you all.